The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and let's just go. This is the 15th day of February, right in the middle of the month. This is what we wanted to see. There is a left side, right side price time match with the Dow going to the high that was made. I think it was December the 3rd. Yep, December the 3rd, 25,980. It's taken, instead of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 sessions to get down from the 25,980 to the 21,712 low of the 26th of December. In this particular instance, what it's done is taken all of these sessions right up until today to get to just underneath that 25,980 level. The high today is 25,807. Really, really good action, but it's taken a long time. And you can see, look at the MACD. And this is going to be a little lesson today. I thought we'll do that today, Technical Friday. Have a look at the way the MACD crossed negative, the 9-period differential. This is the green line, comes slumping down, makes a big U-turn, and then starts to move cross positive and has been positive all the way. And until the Dow, I'd said, until the Dow to subscribers, until the Dow pulls back about 300 points, we won't see the technicals deteriorate. And now we're up 335 points. So you can see that the other technical indicators that I like to use, like this 14-period moving average, like the 9-period moving average, look how nicely the price has held it. I felt sure that today we'd see some kind of weakness, a pop to the upside, and then a drop. We haven't seen that at all. Seen a little bit of tiny little drops. Well, I'll show you that in a moment. But in the meantime, the price is moving higher with technicals confirming. But at the same time, the stochastic is much weaker here, even though it's at 90%, which is really strong. It's much weaker than it was at 97% when we were at the little doji peak D high. And the other thing that we're looking at is within the context of, excuse me, within the context of the channel. Look at this beautiful channel right here. I thought we were getting to the upper part of the channel that we would be pulling back. Well, we did pull back a fraction, but now we're going towards the upper part. So all I can say is this has been a fantastic rally. And one of the things I'm looking at is I didn't expect to see it so quickly, but United Technologies just broke sharply above the 200-period exponential moving average. That's a good sign. I don't know whether it's telling us about China, whatever it is, it's telling us that after that plunge from the 130s to the 100 area, very sharp decline, over 30-something percent from its high of 144, almost 40%. Yeah, 44%. It's come back to 127. That almost makes a mockery of all the nervousness we experienced back in the last couple of weeks of December. Because here we are as if nothing had happened here, folks. But wait a minute. If I look at this as a mix, look, SPX.X, the S&P is up today, not quite as sharply as the Dow. 2,800 was the high that was made back December the 3rd. And here we are at 2768, not far from that, maybe 30 points. But at the same time, MACD is holding okay. It can do that for a little while longer. It's like a rectangle formation that can last a lot longer than your patience. But now you can see the histogram starting to narrow. And that says to me that the upside momentum is starting to fail. That doesn't mean to say the price has to, but it just say in watching the technicals, in doing an MRI of the patient, it says the technicals aren't quite as strong as they were before. So watch out that there could be sudden moves to the downside. This is a leg F to the upside. Might have to use an alternate account, calling it F for now. And yes, the stochastic at 91%. All very good. The S&P is going to have to drop. Today it's up 23. It'll have to drop about 37 to 42 points to start getting that MACD closer to turning negative. The QQQ is a different story. The index 100 trading at this particular point. Let me just get to that. 171.52 off the high of the day, but the high of the day made a new recovery high in a leg E. And that's one of the reasons why I was looking at this, saying a scan saying, I think that based on my Chapman wave notations, we're getting close to some kind of a pullback. And here again, the stochastic is lower than it was before, but it's still at 89%. That's good. In all cases, relative strength is kind of good, but not great. That's the little gray line over there. On-balance volume is at a high. That's usually a tip-off to say you're getting close to some kind of a pullback. But let's look at this in closer detail. You'll see that the QQQs had a high of 173.31 back on December the 3rd, and the high today is 172.56. It too is really close to that previous December high. Now I'm going to show you something that I think is going to be the key. And we'll watch this very closely. The SMHs trading at 102.46 made a high today of 102.96, opened at 102.76, trading now at 102.43. Not a big deal. G/C, MACD is still good. Stochastics at 91%. But it's going to, I think, going to be the harbinger of a downturn if at any point you start to see a trade under 100 in the 99s. That's going to suggest, excuse me, that's going to suggest that at some point, quite soon, there will be a pullback, and that pullback will be essentially saying what led us up has also led us down at different times. When it's turned down, keep an eye on it. Now, what for me is a clue, and what I've been saying for quite some time is there are really four factors that we've got to look at. Let me just get some water here. One is at 121.89, just up 10 cents, the TLT, it really needs to be going into the 123s with the volatility index trading right now at X, there we go, trading at a low at 14.82. That volatility index needs to climb, and it needs to climb into the 16s and then the 17s as yields come down, as the TLT bonds go higher. And I want to see the SMHs pulling back quite sharply, about 3 points. I think those are the ingredients. The fourth ingredient will be a kind of, how can I just put this succinctly? I want to see little spurts of bad news that could be market impactful start to become headline news. Until it does that, you're not going to get that big sell-off. And after all, whenever have we had a state of emergency declared and the market goes up 350 points? Doesn't happen very often. I'll be right back. Basil Chapman, Tiger Technicians Hour. Let's have a little glance at the E-mini right here. Okay, I'll be right back. We'll talk about this when we get back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So I had a question here. There we go. IBB. Hi, Basil. Thanks for sharing all your great views and knowledge on the market. Quick question that I was hoping you could address on your show today. Is the IBB in the body neck of a stork leg formation? It looks like it, but not sure if it's meeting all of the criteria. And many of the stocks that make up the IBB, that's BIIB, Biogen, Amgen, AMGN, and Gilead, GLID, appear to be rolling over and on what looks like Chuff B's down. Can you take a look? I'm looking to go short next week, but don't want to get in front of the neck. That could extend up significantly from here. Thanks, Scott. So, Scott, this is what I'm looking at. The IBB, and I've seen this in a number of charts, is making a pattern that resembles, it has a couple of aspects to it. One is right there. It has a rising wedge pattern. No, I shouldn't say rising wedge pattern. It has a wedge pattern, and at the same time, it has very quietly, over a period of 6, 7, or 8 bars, gone to another high, recovery high, then pulls back sharply and makes another recovery high. This is a pattern that you don't see very often. I've seen it quite a lot lately. In fact, I've seen a lot of patterns lately that are very unusual in the history of looking at these particular patterns. This one, I would refer quickly to the weekly chart, which is very strong. The IBB weekly chart, the MACD is very strong. The 89% in the stochastic says it should remain in a trading range at this particular time. The monthly chart is improving, but now let's go to the daily and I'll show you something. When I look at these patterns, I make a distinction between the Chapman wave stork leg formation that has to have an oval. It cannot be an expanding wedge. It cannot be a rectangle. It has to have the look of a pattern that has a center that is kind of a rounded top and a bottom that is a rounded bottom. And when it does that, it meets my criteria. This one kind of had it, but the move down from the peak, see that those three doji candles, they made the high just a couple of days ago, and then the pullback to the low of the 8th at 106.35. That is a little unusual. It didn't take out the low of the 30th, which is 106.02, when it went to 106.35. It says, yeah, maybe this is a leg D that happens to coincide with the stalk leg. So this is, let me just type this in here. Let me just go to caps. This will be leg, body. Can't spell today. Let's just do that again. B-O-D-Y. And then you get the break, and this is the neck. That to me is you're correct. This is a closer annotation of the pattern I'm looking at. If this was really a true Chapman wave stalk leg formation, it has a lot of the criteria. This deep pullback, I'm saying it held, it's okay. It went maybe half a point more than it should have, but you can consider this is the neck, and you can consider that the MACD could deflect lower here or break above. So you're exactly right. Got to be a little careful. The stochastic had this real sharp move to the upside, and these very quick, sharp moves to the upside that don't go to a new high, even in the stochastic, often fail. The on-balance volume is at a high. So I'd be a little careful in looking at this in terms of the short side today. But these are the clues that I would look for. If on Tuesday, there's a little doji candle, it cannot be much higher. If it's much higher, you're going to just have to wait, because I think you've identified correctly what we're looking at. And I'm just saying that consolidation in the weekly is like a coiled spring. Look at those bars. Every bar is a fairly narrow range, and they tight in the weekly chart, and it's in leg B. I'm not sure about shorting, but I am saying that if one was long in the sector, I would be raising stops, and then you can prepare. So I'm saying to you, you're correct in holding off right now. I'm going to do this. Remind me again Tuesday. We'll do it again Tuesday. All I can say is that these 1, 2, 3, 4, 5. Today's the 6th green candle so far, a very strong candle. Say to me, it's bumping into the resistance line. Everything there says that if the MACD, if it doesn't go higher, but it pulls back 1.5 points by Tuesday or into Wednesday, without anything more than just it's at 111.49 high, recovery high, maybe 111.58, maybe even 62, not much higher than that. But then it pulls back, and then it has a sharp pullback, then I'd be looking at it. It's not my favorite in this particular pattern to be a short. There are other patterns that I think are would give you a better risk reward, but good eye, good. Thank you for pointing it out to me. I've been looking at, I wish I'd written them down. A whole bunch of charts have exactly this formation. They just steadily went higher and higher. No, I don't think it's Cisco. Let me just have a look. No, there are a couple of charts that have done it, and they're all saying to me, very unusual pattern that just slowly over a period of weeks, really, you got your A, and then you get your B. Now you've got a very strong A to B, and then you get your C, and then you get D, maybe even an E. So just be a little careful. Don't be too anxious to short. Watch it closely. Next thing we're looking at here is MJ was a question. This is MJ is called the Alternative Harvest ETF, cannabis sector. It's trading at 35.58. We've been long for a while. It's gone up to the 38.36 level, then pulled back to the 33.80, 32.96. Sorry, 32.96 level. It's at 35.58 right now. So the question is this making a cup pattern? And I'd say it's trying to make the cup pattern. But the stochastic never crossed very sharply higher. It's kind of flat. It's in a gray leg B right now. In other words, it's under the previous sharp high. So this is A to B, make this gray. And gray means it could fail at any point because I haven't got any technical veracity, anything that's confirming it. So that just says be a little careful here. I think it's going to make an H pattern, do a little bit of testing of the 34 to 33 area. That's going to be the big clue. It needs a little time. Some of these stocks just ran up straight up, and they need some time to consolidate. So the answer is, I'm not sure that this is the move that's going to make the cup formation. It might have to come back and make a longer stretched out bowl formation rather than a cup. But if it does start to trade on Tuesday, you never know. Anything can happen over the weekend. Yes, stocks get recommended. If it's trading in the 3650 area, I say yes. Then I'm looking at it now rather than later. Next question I had was, a couple of statements, and I'll get to those. They're not questions, they are statements with exclamation points. I'll get back to that in a moment. So Dow is up 358. We'll be right back. Let's look at this E-mini. Okay, just starting to stall out a little bit. We'll do more on the E-mini in a moment.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, excuse me. So, the question I had was, I kind of disagree, Basil. Couldn't this complete cup and test the 2-4 candle, that is the 4th of February candle? Just saying. Yes, of course it could. There's no question. But with the MACD like this and the stochastic like that, it's just going to be really tough. It had opportunities. Each one of in the cannabis area, there were a couple of stocks that had really good action yesterday, and it's just ho-hum. I think it needs a little time. That's what I'm saying. Can it do 38, 36? That would be my next target on the upside. But first, I think there has to be a digestive phase. That's all I'm saying. We're long, and we just we don't have to worry about it in the shorter term. But to add to a position, that's where we're going to take notice. So that's MJ that we were looking at. Now I'm going to start ignoring these. You completely missed the greatest opportunity to buy the stock market for a long side in December of 2008, period, exclamation mark, Kevin. Kevin, I'm getting a little tired of this. Every day from the late December, I had buy signals over and over and again. Some of them were stopped out, right? But I was not short. We were buying. I was saying we're buying this. The positions that we've bought have done fantastically. We're still in some of those positions. I'm just getting tired of that. Okay, and every one of the diamonds, every time we've shorted, immediately there was a pullback, even if very soon afterwards there was a move to the upside. Tired of it. So let's get on with it. So the QQQ negative divergence, relative weakness versus SOX plus 3.3%, Apple. Okay, so this is what I want to look at. NVIDIA. NVIDIA is in leg C, and it gaps up. That is a good move because it's just broken out. I couldn't give it an alternate count, and it can't be a gray C. It has to be a blue C. In other words, even though it's way under previous highs, I still have to consider that maybe NVIDIA trading up 4.73, up 159.26, maybe. What it's looking like is that there's a rectangle formation, and we've broken above it. We are now below the high that was made back on the 25th of January at 160.88. And what's really important about this is that the weekly chart, the technicals are just turning up a little bit. We're going to see what happens here. Why? Because I think NVIDIA, what it's saying, NVIDIA graphic processing for workstations, games, mobile devices, etc., together with Applied Materials, when they came out yesterday with the earnings, Applied is down 1.31 after a little doji candle, two doji candles at the high, the recent recovery high of 41.24. It's trading at 39.40 right now. Weekly chart has been very good, but really when you're coming from 62.40 down to 28, and then you bounce to the 40 area, 41 area, on a chart formation, a lot of work has to be done. And this is saying to me, let's see what Intel is doing, that it's very selective now in the semiconductor area. And as a result, Intel is doing pretty nicely here, but it's still way off its high of 57.60. And that low that was in the 42s is a nice rally, 9 points. This is a lot better. If you look at advanced micro devices, if you look at the monthly chart, this is okay action. If you look at the weekly chart, yeah, there's been a rally, but it needs to get to the 25.80, 26.30 area very quickly. It could do that. It hasn't shown it yet. So I'm looking at this and I'm saying, I think that's very selective. And I think that what Applied Materials, one of the big semiconductor companies, is telling us things have not changed that much, and that the rally that we saw was an extremely oversold, a very optimistic look, and that perhaps the semiconductors need to take a little time out. That's what I'm saying. That's what we're trying to trade. And from the way it looks, this particular move that we've got right now, where the SMHs are up 0.35, the Dow is up 0.35%, the Dow is up 1.35%, and the S&P is up 0.84%. This laggard is saying, watch it carefully, because if there is a pullback and you go into the 99s, there's a real good chance that it's going to take a timeout. It doesn't say yet how low it's going to go, but it does say there could be a timeout. That's what I'm saying. All right, rectangle formation. On the 2-minute chart of the E-mini, look what happened. It made a peak D at the high of 27.73, round number, pulls back to round number 27.29 right there, and that was trough E, and now it's just gone kind of sideways, gone to peak, gray peak A, gray peak B, gray peak C, and now it's kind of it's struggling. So the big question is going to be for me, is the market seeing some kind of a short-term top as we stand right now? Maybe there's a rally into the close. I'm not sure on a 3-day weekend if anyone is going to do that. Maybe there'll be a bit of a pullback towards the close. Will the high being established today become some kind of a high, at least on the short-term basis, going into Tuesday and Wednesday, if over the weekend there's an assessment of what's going on? A lot of people say, you know, maybe it's time to pull back a little bit, take something off the table. That's really what I'm saying. Look at the QQQ. MACD's just starting to turn down a little bit, but hasn't crossed negative. Stochastic's 89%. Nothing yet to see. But there's been a bit of a struggle with the candles lately, even though it's over the last week and a half going to new highs. Just saying that this leg B in the weekly chart is suggesting that we're getting real close to some kind of a pullback. That's what my eye is saying. And I've been saying that for a while as we've gone up, and we've had some pullbacks, very minor, but in fact, we've gone a little higher. All right, so that's what I wanted to clear up. Next question is the IYT. What is the relative strength? Transportation relative weakness Friday. XPO is down 17%, and Federal Express. All right, let's look at that. IYT, leg F, little doji candle right here. MACD strong, stochastic strong, and unbalanced volume is up at highs. Got to watch that closely. Very strong resistance in the trend line in the weekly chart. Stop right there at 190, 191, right there. So that means it's at resistance. I haven't got any signals yet. I'm watching it closely. Let's look at, was it XOP? XOP, I used to get an email all the time about XOP. Oh, this is another one that had that pattern. So this is the pattern we were looking at. I didn't notate this, but I looked at it just yesterday. And I said, aha, another one of these patterns that, there we go, look. This is peak A. That is peak B. And then it goes to a peak C, even though they were almost parallel highs. I'm going to call that for now peak C. And then XOP, which is the S&P oil and gas exploration, stalls, makes this pattern, comes to lower lows and lower highs, and then has a strong leg to the upside. It's worth looking at this because the XOP, this is oil and gas exploration, starting to show some improvement. We'll talk about that when I get back. Basil Chapman, Tiger Technicians Hour, Dow's up 349.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
George, you see what you remember my expression? A rectangle formation can last a lot longer than your patience. And look at this, it's just been stuck between 2765 and 2770. And look at that, it goes all the way back. Yeah, one little slip underneath, but otherwise it goes all the way back to about 1050 this morning. So that's, 1050, 1150. That's over an hour on a 2-minute chart. And that's a long time. So I think you have to be very selective here. The question is, so what do we do now? And the answer is be selective. What you've got that's working long, today's a good day. If they're working very well today, that's a really good sign. For instance, in our portfolio, for my traders corner this morning, we had positions that we were looking at. I said we're going to stay with our long positions. We might start adding. We've started trying to add to the short side, and the long position, we've got one that's up 3.2%. We've got another one that's up. Another one that's up 2.06%, and another one that's up 1.77%. And that's what you want to say. All of these are beating the market. And that's kind of what it says to you. That means you, at this particular point, you're in the right sector for this particular time. That's the way you have to look at it. Be very selective. Now, let's go to another question I had, which was where? Oh, the IWM. Would I look at the IWM? IWM's been acting really well. Oh, XOP, I didn't finish. I'm sorry. During the breaks, I have to answer so many questions that I sometimes forget by the time I get to the show. So this is really strong. This is going to recycle to an F/C. And until the IWM actually starts to, it doesn't have to drop sharply. But at 156, for a couple of days, I've been saying it has to go under 150. And now it's at 156. This is fabulous action. This is action that's testing the weekly resistance line. That's very good. And that tells me that there's a rotation going on, even with intraday corrections. And what it's saying, because of maybe the dollar strength, maybe because of crude oil, whatever it is, the IWM is a little bit out of the radar. It's under the radar, and it's kind of working its own way up. So this is good, and the stochastic has gone back to 96%. That's good, and that tells me you don't want to be too early here to short the overall market. Be very selective. Maybe it's sectors that you look at. So there's IWM, the Russell 2000, really good action today. I'm anticipating only if there's maybe a little kind of a doji candle on Tuesday, and then Wednesday, Thursday start to pull back quite sharply. With the general market, with the VIX rallying, with the bonds rallying, that's when we're going to start to see something a little different. So that's a very good sign there. Let's go back to the XOP, and what I want you to say is, in the patterns that I like to look at, this is what we're looking at right here. You've got a resistance line. We're just bumping up against it. Chapman wave falling axe formation. Lower lows, lower highs and much lower lows, and then it turns around and tries to retest the previous high. If this breaks at 30.88 right now, up 69 cents, if you start to see 31.50 in the XOP anytime Tuesday or Wednesday of next week, that started a leg B up, and this very oversold area, because let's face it, this has been one of the areas. How long did we see crude oil go down? So it's been a long, persistent move. It went from October straight into December. Crude oil went from 76 to 42. So this is going to be very important right here. How does it act? How does it react? And you can see it's making a potential double top formation. But there's a chance that if the stochastic actually from 58 starts to trade into the 63 area, that MACD could cross positive and give you a nice arch on the right, like an M-shaped formation, with the arch on the right being that next level of rallying, and that could take the price with it. So this is another thing to watch very closely. So that's crude oil. So the XOP has a slightly different chart formation, but it has the same implication. Oil and gas exploration. Of course, they don't always go together, but in this particular instance, there could be giving the same sort of messages. So if you look, so in the Dan Bob says it's short the crude oil at 56. Crude oil at 56, huh? Let's see. All right, well, that's that double top formation. Let's look at the 120-minute chart right there. Peak A, B, it's only in C. Let me just make sure I'm doing this correctly, because they could have recycled. There you go. So from that low, okay, here we go. Chapman wave, up arrow, because why? We know that it went up. We know that that's the lowest low bar. Let's give it caps. Here we go. A, B, C, D, E. Pulls back and then goes A, B. Yeah, I have to consider this as a C. I think it's going to go a little high. It doesn't say how high, but I think it's going to go to a D. Could happen over the weekend while we're out to lunch. It could happen. And then we've got all of Monday where we don't trade because the market's closed. So watch this closely. I don't have to tell you, Bob. You know exactly what to do. So this is your trade. I just thought I'd look at it since you mentioned that. The high today was 55.72. So you must have done that pre-open. All right. So next thing I'm looking at here is, you did it on the futures. Let's go to question of, the EEM. I need to look at the EEM. So the EEM, which is the emerging markets iShares, trading at 42.01, down 14 cents. This is what I meant about being selective. Look, it made a peak F top, and this candle looks exactly what we're looking at now in the Dow and the others, with a big candle, gaps up, big candle, then all of a sudden turns down. I'm not saying it's going to turn down because I don't know, but I'm prepared. And I'm just looking at this, and I'd drawn this in earlier with the EEM saying should be a down channel coming. So it went into the down channel, went out of it, and now it's testing the support line. It's under the 200 period, 14 period, and the 9 period moving averages. EEM needs at 42.01, made a high, recovery high of 43.46. By Wednesday afternoon, if the EEM is above 42.73, I'd say that's good action. But if it's underneath 41.90, I'd say, a problem. Let's look a quick question over there. I had one earlier on. Could I look? Oh, that's right. Could I look at GE? I can't find the question, but I'll just go to it because I remember it. GE trading right now up 23 cents. So now that peak E at 10.77 made right there. I think that was the last week of January. Yep, 31st. High-level consolidation. Nothing to see here, nothing negative, nothing positive, just as of now. Let me look at it this way. Yep, it went into the gap, but it hasn't filled the gap. The gap high is right here on the 30th, 9.28, and then the gap up low was 9.76. So 9.28. So it's about a 60 cent gap. took a little bit in. I think GE trades a little bit sideways. I'm beginning to think that GE is going to be one of those stocks that on the next pullback, if it holds the 930 to the 890s, will be good. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Just before we go to the final segment here, let me just say the Dow is working very well. One of the things you could do is just wait for a pullback, and that pullback would probably have to go underneath yesterday's low of 25,308 in the Dow. That's 484 points. No, that's a little much. I think confirmation will be if we go under today's low of 25,564. So that would say, yep, now we can start thinking that there's some kind of a rollover coming. It doesn't have to be serious. It could be serious. It doesn't have to be, because until the MACD and stochastic really turn down, you've got yourself some energy on the upside. That's what I was mentioning yesterday. I mentioned the day before and the day before. But you can still start trying to get into the short position, because my suspicion is there's going to be one day when it works, and it'll work, and instead of having that intraday reversal, which we often get, there won't be an intraday reversal, and it'll be real quick. So, but on the other side of it, what I've been saying for quite some time is that I'm looking, and we've been building a portfolio and also looking at what to buy in the next big pullback. because some of these levels, and I've been saying this for a long time, the low that was made in December is more and more looking like a very serious low. There should be some kind of a pullback at some point. That's normal in markets. We should get it. We will get it. And when we get that, we're going to have to see whether or not we're going to step up to the plate to get the stocks that have done really well, that look like they are ready to go to higher levels after a decent pullback. Make it simple. I don't want to make it complicated. Okay, next thing I wanted to do is just as we're about to wrap up, over the weekend, take your time, go through a bunch of charts. I'm going to be doing that for my subscribers to my opening call, looking at stocks that we've got that have been working very well. Some of the stocks, in fact, we were in Walmart. We made a profit on Walmart. It got stopped out and then whoop, just went right back up again. Hey, that's a nice pattern for Walmart. So look at the ones, even the ones you've missed, and see where you want to get into them if they have a sharp pullback. Be ready. This is a really good long weekend time to get a preparation ready for positions you'd like to have in the first quarter. Have a wonderful weekend. Check out my opening call, and I'll see you on Tuesday. Have a good
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.